If you crash it, it'll go up in value because then you can write it off. The younger generation, I actually think that for them it's not risky. It's riskier to stay in a corporate job.
How should small businesses be best prepared for the impacts of interest rates rises?
Well, the golden rule is
Hey everyone, welcome to the first episode of Accountants After Dark with Davie. My name is Sandon and I'm joined by the Director of Box Advisory Services, Davie Mach. Davie, how's it going?
good. I had spicy food last night and now I'm eating lemon ginger.
So if the video cuts out dramatically, we know that you've just run out of Davie, I'm really excited for this series because I think people will see a side of you that they don't normally get to see. I think it'd be cool if you could share a little bit about why you started this series and what you're hoping to get out of it.
I started this series because the videos that I've been doing is, been done so many times, but I really want to show the personal side and the personal thoughts that I have in business, my personal life, as well as in accounting and tax.
If anyone has any questions for Davie, you can leave us a note in the comment section below, or you can slide into Davie's DMs. Just make sure that they're age appropriate for Accountants After Dark, right?
Mate, you can send me anything you want. Yeah.
Anything?
Okay, probably not everything.
I'm gonna give the option. We've asked our Instagram followers and followers on YouTube to send us any questions that they might have. Do you want to start off with something lighthearted or do you want to start something a little bit more juicy and personal?
Personal, let's do personal.
Are you sure?
Yeah, let's do personal.
Let's just jump in. A few people had a similar kind of train of thought with their question about what gave you the courage to leave your corporate job and pursue your own thing. Obviously, there's a bit of stability that comes with being in the corporate world. You went in the Big Four, but how did you take that leap?
The reason why I did it was because of family. Mum and dad weren't working. They stopped working for a very long time. And so therefore, my brothers and myself were working just to pay off the mortgage. And I realized that if I continued to work in a corporate job, it would probably take 15 years for us to pay off. We'll get a house actually. We didn't even have a house at that time, and pay off our parents' mortgage as well. And I had a chance to do something in my life because I had the flexibility. I wasn't very long-term relationship, wasn't thinking about getting married. I didn't have a mortgage. I had some money saved up and I thought if I had to do it, this would be the time to do it because there would be no other time in a couple of years. I might be getting married or a couple of years I might be buying a house and then I'll have so much more disadvantages.
For you to have a stable job in the Big Four, where you know where your income's coming, you know how much you're gonna get, to leave that to start your own thing where it's so much more rocky, how did you kind of navigate that, knowing that it was a risk, but maybe with a bigger payoff in the long run?
To be honest, it's a mindset thing. These days, the younger generation, I actually think that for them, it's not risky. It's riskier to stay in a corporate job because they give up on their goals, they're not happy, and it's bad on their mental health. So as long as you can change your mindset and have a lot of backups, I had a lot of backups in my life. So for example, I had savings, I had $20,000 savings. I asked my brother if I could borrow money off him. I said, worst case scenario, I'll borrow money off you. I also then went to the banks before I quit my job and got some overdrafts. The overdrafts are basically loans that you can get where your bank account goes into negative. You don't actually physically need to use it at that point in time, but I got that too. So, and then I got credit cards as well. I had probably about $100,000 to $150,000 worth of credit that I could use. I didn't touch that credit. I also then had like about $40,000 in fees that I knew I could rely on, and I can go to these clients and say, hey guys, I'm setting up my business. So for me, having those plans in place, it actually wasn't risky. It was actually more risky staying in the corporate job because in the long term, I knew that I wasn't going to be happy. 2, I wouldn't be able to hit the goals that I wanted to hit. And 3, I think fast forward 5 years, I wouldn't be where I want to be.
Yeah, I guess you did all the work to build yourself a safety net.
Yeah, I think the big thing that I used to ask myself, and someone told me this, I can't remember who it was, is they said that if it all failed, worst case scenario, you'll probably be able to get back that job that you quit. And most likely, you'll get a pay rise as well. And I was like, what do you mean by a pay rise? They said, well, from the skill set that you're learning of starting a business, it'll be very attractive for employers and plus inflation as well. So you'll probably get those pay increases while being off your job, unless you can't negotiate your pay that well. Yeah, I decided, you know what, you're right. If I quit my job, a couple of years later, I came back to the original employer, they probably would have hired me anyway. But I think a lot of people think it's really risky, and it's because of what society expectations are. We're so taught from a very young age that we have to have a full-time job. If you don't have a full-time job, it's weird.
We have a question from someone in their mid-20s as well, from our YouTube page. I'm in my mid-20s and have a decent paying corporate job. I've always dreamt of buying a house before I turn 30, but interest rates, inflation, starting my career during the pandemic, along with some personal challenges, has made the goals a little less attainable. If you were in their shoes, how would you invest your money if the property market wasn't an option? I think this might be a very relatable question to many people watching at the moment.
I'm not a good investor. I just want everyone to know about that. The only thing I'm really good at is starting a business and making money from a business. If you count that as investment, then I would say that I'm pretty good at that. So the thing is with investing is that you're making about what? Anywhere between 6% to what, 10, 15% if you're lucky. If that person's 25, 10 to 15%, let's say on average they're making, they're never gonna be able to buy or save up to purchase something in Sydney from 25 to 30. I'll be honest with you guys. You might be lucky, but you must be one of those less than 1% people that can do that. And so a lot of people then start thinking about borrowing money or leveraging that money to be able to do that. And that's, to me, kind of now you're looking into more business and you're starting to run a business because you're leveraging money and you're thinking of a way to start some sort of venture. And if you're doing that, if you're thinking about doing something like that, then why don't you just do something that you're actually interested in and have some experience in? What I'm trying to incline you guys to think about when you're 25 is you've got a perfect opportunity for you guys to start a business. These days, this generation right now, the barriers of entry of starting a business is very low. It's quite easy to do one online and the cost is quite low. So why not try to capture that? I made my first, and I always say this in podcasts, I made my first $1 million in turnover. It took me 4 years to get there. But once I learned how to make that, my second year after making that $1 million, I made this second million. But I think that a lot of people won't be able to do that if you think that you can just invest your money to be able to get to $1 million or purchase your house. I think that these days you have to start some sort of business.
Yeah, well, that's actually connected to a question that we also got on Instagram about how you go about running a business, but also your personal life. Obviously, your personal life is a big driver for your business.
Yes.
But like you just said, family, your friends, they want more of you than what you may be able to give, having to run the organization that you do. How do you kind of internally navigate all of that?
Yeah, that's a good question, to be honest. I think I struggle with that. And as business owners, I think everyone does. You get so consumed on having so much control of the business. And I find the business is very soothing to run, if that makes sense. And the reason being is because we feel like we can control all the factors. So what I mean by that is that when I know if I put this much amount of effort in it, I know that in return, after a while of me running a business, I'll be able to figure out that I'm probably gonna make this much money. When it comes to family, you can put so much time in it and you can be left with heartbreak at the end. And so therefore, a lot of business owners would get so consumed over running a business and because they feel like they have a sense of control, but when it comes to their family, they don't have any sense of control. And that freaks me out. That freaks me out completely. But I guess it's those little things that you want in life and those little things that you have with your family members that makes it all worth it. After a certain point, when the business started getting to a certain point where I could actually be financially stable, I forced myself not to work over the weekends anymore. So on Saturday and Sunday, I didn't work over the weekend. I didn't even open up my laptop, even though I know that the emails were very important. But I also leave one day weekend for myself so I can just be present with myself. Because the problem is if you spend time with your family over the weekend, but you don't have any time for you to wind down personally, I find that I'm not present with my family.
So what do you do to wind down?
I just watch a lot of movies, Netflix and anime. I find usually TV series to watch, and I just watch a crap load of them.
What are you watching at the moment?
What do you call it? Reality TV shows where it's very dramatic.
Like what? What are you watching?
Selling Sunset. I love a good amount of bitching. So when girls or guys bitch about each other, it's amazing because then I go, oh wow, I don't get enough feistiness in my group of friends because a lot of my friends are either professionals or accountants. They don't even talk, so let alone try to bitch about people. So, seeing these other real estate agents trying to bitch about each other, it's just fun.
Yeah, I think it's nice seeing the drama, but not having to be emotionally involved.
Oh mate, I get emotionally involved.
I'm surprised that you say that you don't have much drama in your life because to some degree, your personal and business life are kind of blended together, given that you work with your wife as well as your brother.
Yeah.
What's that experience like? What's it like working with your wife?
I love it. I think it's a privilege to be able to work with your wife, right? For some people, in some couples, you can't do it. It's hard because you fight all the time. And me and my partner fight, but we do fight at work. We fight at work, we fight after work, and it's so funny when all my team see us like passive aggressive at each other during meetings. But I think the biggest thing for us is that we learn to compromise. You know, sometimes call her out when I need to call her out, but sometimes when she needs just someone to lean on, I'm there for her. And having that person at work that you can rely on is really important. You know, the term where it's like, oh, it's my work wife or work husband. That's a thing. People actually need that in their career because they need someone to lean on that is emotionally connected with you. The good thing about this is that my work wife is actually my wife. So yeah, she's someone that I can lean on when things are tough. And to be honest, things have been tough this year. We've been up, we've won 2 awards, accounting awards. But right after that, a friend of ours and one of a staff member leave us recently. And that has been tough on me. And I've been able to cope because I had my work wife that was there when I told her that I was gonna break down. It's good to have something like that. You don't want to break down in front of an employee, but if you break down with your work wife,
who is your actual wife?
It's actually your wife. You can sort things out, like, and she won't judge you.
Yeah.
And it won't impact her in a way that it would impact an employee, because it's a different relationship. And having my brother there as well is great too, because, you know, I was able to talk to my brother as well. We call him Big Brother. He is actually my big brother, but he's also the big brother from a reality TV show which watches everyone as well. I actually think there's a lot of pros and cons, but for me, the pros outweigh the cons.
Yeah.
And I always ask my partner, would you have it anywhere else? Would you rather work somewhere else? Or would you rather not work? And for her, I can tell she loves it. She enjoys it.
I might pivot to a bit more of a technical question. You posted a video on your YouTube channel about the tax rebates you can get by purchasing a EV in Australia. We've had a few questions about if these government reductions, in your opinion, actually outweigh the cost of, you know, paying a premium for an electronic vehicle. If you were to weigh up all the petrol saving costs and the rebates that you get, would you invest in an EV yourself?
That's a very hard question to answer because one, I don't know what that person's situation is, but let's just say that you can afford the car. I find EVs, if you're running a business, one of the best purchases for cars. Reason being is there's 3 different taxes that you need to be worried about: income tax, GST, and FBT. And when you buy an EV car, it's positive in all 3 of those taxes.
As someone who's completely tax illiterate,
yeah,
could you explain those a little bit more?
So income tax is, if you make a profit, you have to pay tax on your corporate tax rate or your personal tax rate. For example, you make $100,000, you have to normally pay $25,000 in income tax. That's profit, 100K profit. GST is if you spend something of say $50,000, you get to claim $5,000 GST back usually. So that 10% GST that you always claim. A lot of businesses claim that. And when they sell something, they also have to pay taxes of 10% as well. But because in this case, you're buying a vehicle, you get a claim. And the FBT, fringe benefits tax, it's a tax that a lot of people don't know about. It's basically if you get some sort of private benefit from the employer or from your own company, because you're an employee of your own company, you get taxed on that. And that tax is 47%. So that's the hidden tax that a lot of business owners pay when they buy a luxury car. They don't realize that you can't claim 100% of that as business. So therefore there is some portion of it that's personable. And that portion can go up to about $20,000 a year. And therefore you're paying 47% of $20,000, which is a lot of money. The EV rules that came in recently in the last couple of years is the government's trying to encourage people to use EV. How does that benefit us? It means that you don't have to pay FBT anymore, as long as the car is at a certain limit. If you purchase a car, I think it's like about $86,000 or under. If you purchase a car that's under $80,000 and it's EV, then you get to claim GST and you also get to write it off as a tax deduction. But if you're an employee or you're working for someone or you're earning PAYG income, it doesn't really matter if you buy EV or not. The only thing that's beneficial is the savings in petrol. But you can easily work out, is it, like, if it saves you like, $5,000 worth of petrol a year, how much does it cost you in terms of electricity and how long do you think you're gonna keep it for? It doesn't really matter. If you want to be completely cheap, you should be buying a Toyota Camry or Toyota Corolla, which is hybrid. Doesn't really cost that much in electricity and it doesn't really cost that much in terms of petrol as well. So I think that's the best car to buy. And if you crash it, I'm not an expert, but I used to tell my friends, if I crashed my Camry or scratched it, it'll go up in value because then you can write it off. You can get insurance claim.
That's why this is Accountants After Dark.
Oh, I do know that you get a $3,000 rebate if you purchase a car that's under a certain amount. But look, man, like you're spending something that's like what, 60 to 70K to get $3,000 back, whereas you could buy a Toyota Camry for what, $25,000 to $30,000. You still have the same benefits of the EV.
We had a question from our Instagram about how should small businesses be best prepared for the impacts of interest rates rises?
Well, the golden rule is just make more money. That sounds cocky as hell, right? Make more money. But the first thing you should do is increase your prices. In the last 3 years, inflation has increased a lot of prices for any household good or living goods or investments or whatever it is, right? If you don't increase your prices in the last 2 to 3 years or even year on year, you're already losing money. Your net profit will be less. Software costs, interest rates, everything has been going up. And so when I say make more money, I mean increase your prices first. And that's the easy thing that a lot of business owners don't do and they just forget about. And I'll be honest, I do it sometimes too. Every couple years or so, I do not increase my prices, and I think it kind of works in disadvantage to me. But I do it because I make allowances in other ways. But I do recommend most business owners to look at their pricing, especially recently, to increase their prices. That's the first thing you should do. Second thing you should be doing is then reviewing your business processes and your products that you're selling, and maybe you should pivot. To pivot, look at different type of products that are slow moving, for example, or don't really make that much of a profit. For example, personal tax returns for us cost us more money than we actually make. We charge about 300 plus for personal tax returns, but in terms of the work that we spend to do it, it costs us anywhere between 3 to 5 hours per employee to do it. And the problem with that is 3 to 5 hours of time, we could be charging another product that we spend about 8 to 10 hours, but we can charge 10 times that amount. And the profit margins are a lot more better. So we've decided this year that we can't take on any more new clients on personal tax returns. So that's another thing that you should be thinking about. And then the last resort, you should look at reviewing your costs. So a lot of accountants will first say, review your costs first and minimize your costs. But I always tell our clients is you just got to pivot. You should be pivoting. You should be increasing your prices, and then you should be looking at different type of products or services that you should be doing to make more money. If your whole business model doesn't work, then can the whole thing and then start something else. I'll be honest with you guys, if you have this business model that doesn't work, then you should be looking at another business model that can make you a lot of money. It's gonna be a lot of stress on you if you're trying to make this thing work and it's not gonna work and the profit margins are crap, and it's gonna affect your family. So why put your family into that stress? Just start something new.
I want to wrap up by talking about, you've co-founded a podcast called Level Asian, which focuses on platforming Asian Australian stories and building a community. Very different to working in accounting. How has your experiences with building that sort of avenue and channel centered around not so much profit, but more on community? How has that impacted your business? What have you taken away from that to apply to you running an accounting firm?
I did Level Asian podcasts because being in accounting for 15 years of my life, I was getting a bit, I wouldn't say bored, but I just wasn't getting the enthusiasm that I used to get in running a business and doing accounting. And so I jumped into Level Asian because I felt like it was creating more impact. And I'm not saying that accounting doesn't give impact, but I find that Level Asian has a broader audience and a bigger impact that we can do. And it also wasn't financially rewarding, which I wanted. Being able to jump into that, the people that I was working with were, as weird as this sounds, seemed like more work colleagues than actually employees. And that for me, it was quite selfish because I wanted something like that. And Box Advisory Services didn't give me that.
So people who work with you as opposed to work for you.
Yeah, and that's partly the reason why I really wanted to do Level Asian. No one saw me as a boss, and people just saw me as a colleague that was, trying to impact. And we had this mission to help other fellow Asian Australians and, prop up other fellow Asian Australians to inspire the next generation.
I think that's a good way to wrap up the first episode of Accountants After Dark. I know we've covered anime, we've covered taxes, we've covered your personal life, we've covered small business and business in general advice. It was a really cool way to kick off this series. How did you think it went?
Yeah, I think it went well. My stomach doesn't feel that bad anymore, so yeah, I must have got it all out last night. So yeah, man, I'm excited to do more of this. So hopefully you guys are interested and want to do more of this.
That's awesome, and we'd love your feedback. So if you have any thoughts on how this series has kicked off or anything that you'd like to see more of, just let us know in the comments or shoot Davie a DM and we'll make sure to get to it throughout the series. See you next time.